All right, so the Nasdaq and the stock market has obviously gone on a pretty big run here. But the thing I'm concerned with is the valuations, because when you look at these, when I look at all these different charts, this is showing the S&P and the Magnificent Seven forward PE ratios. All these different charts that they have on here, it just the data is really showing that like we're at a high for the PE. I mean, you look at so here, look at the red line. The red line is the large caps for the S&P 500. The last time we were at these valuations of a 22 forward PE ratio, it was in the bubble of 2021, and we had a ginormous crash that following year. And then if we look at just a lot of these other charts that pretty much show similar things with the PE ratios, you can see that like there's I mean you could sure there's a chance that we keep pushing higher for a couple months or something, but it's like why would you want to bet against the data and the probability, right? I mean the data here it's showing that like look at we're at a extremely high valuation here for most stocks in the stock market. So I think I'm probably going to take some profits here. And once again, especially if the Fed cuts interest rates and maybe there's consumer spending is good and AI helps all these companies. Sure, it's possible that earnings keep going up and we kind of live in this artificial bubble for a while. And who knows, maybe the stocks keep going higher. But it's like I think it's just a limited run it could go on. And I feel like why would you bet against the data when all this data shows that things are overvalued? So I'm probably going to take a little bit of profits here.